Good morning, everyone, and welcome. It's Friday, February 27th, and boy, do we have a fascinating and kind of conflicting setup for you this morning. So let's just jump right into the numbers.
All right, first things first. The big signal this morning, it's the gift Nifty. And it's pointing to a pretty significant gap down opening. We're talking about 85 points in the red. That's a really clear negative sign before the bell even rings, telling us, that the overnight mood is definitely on the weaker side.
Now, for anyone who's not totally familiar with it, think of the GF Nifty as our early warning system. It's basically trading while we're sleeping, and it gives us a sneak peek into what global investors are feeling about India. So when you see a negative GF Nifty, like we're seeing today, well, it's a very strong hint that our own Nifty 50 is going to start the day lower.
So the big question is, why? Why the pessimism? To figure that out, we got to look at what happened overnight across the globe. The international markets, they give us the first big clues. And honestly, this morning, the picture they're painting is, well, it's pretty mixed.
And this is where things get really interesting. Look at the contrast here. On one hand, Europe closed strong, right? You see the FTSE and the DAX both up nicely. The Dow in the US also finished in the green. But, and this is a big but, the weakness is creeping in. You see it in the US tech stocks with NASDAQ futures slipping. And even more importantly, look at Asia. Hong Kong's Hang Seng is down almost a whole percent. That weakness in Asia, that's almost certainly the biggest thing weighing us down this morning.
Okay, so with that global picture in mind, let's bring it back home. How does this all connect with where we left things yesterday? Yesterday's session is kind of our starting point, our baseline, and man, it was a story of pure indecision.
I mean, yesterday was the absolute definition of a flat day. The Nifty, it barely budged, up a tiny 0.06% after a really choppy back and forth session. And get this, the market breadth, the number of stocks going up versus down, it was split almost perfectly down the middle. What does that tell you? It tells you nobody was in charge. Neither the bulls nor the bears could grab control, which basically sets the stage for a big move in either direction.
All right, now let's go deeper. It's time to look past just the headline numbers and really decode what the big players, what we call the smart money, are up to. We're going to check out what they and the options market are signaling, because this is often where you find the real story. And there it is, a crystal clear signal. The foreign institutional investors, the FIIs, they were pretty bearish across the board yesterday. They were selling both index futures and index options. And, when the FIIs are selling derivatives like that, it's a huge hint they're either expecting the market to drop or they're protecting themselves just in case it does. And if that wasn't enough, check out the put-call ratio. It's sitting at 0.70. Now, all that means is that way more traders are buying puts, which are basically bets the market will fall, than they are buying calls, which are bets it'll rise. A ratio below 1 is already a bit bearish, but when it gets down to 0.7, that's a really strong signal that there's a lot of negative feeling in the options market right now.
So all of this, it brings us to the main event for today. What we've got is a classic battle brewing. On one side, you have the hard data, which, as we've just seen, is looking pretty bearish. And on the other side, you have the overall mood of the market. This right here, this sums up the whole tension perfectly. It's a real tug of war. In one corner, you've got all the data screaming, be careful. We've got the gap down signal, the FII selling, that low put-call ratio. But in the other corner, the market mood index is still flashing greed. It's telling us that despite the warning signs, a lot of people are still feeling optimistic. So yeah, it's data versus sentiment today. And hey, just to throw a wrench in the works and make things even more interesting, we've got a huge wild card in play today. It's MSCI rebalancing day. Now, all this means is that huge funds have to shuffle their money around, buying and selling specific stocks to match new index rules. And what does that mean for us? It means we could see some massive trading volumes and really unpredictable swings, especially as we get into that last hour of trading. So buckle up.
Okay, let's put it all together now. Here's your final pre-market brief. Everything you need to watch for when that opening bell rings.
Let's hear from an expert. Rupak Dayro from LKP Securities is seeing the same weak sentiment we are, and he's giving us some really crucial levels to keep on our radar. He thinks we could see a drop towards 25,300, so that's going to be a huge support level to watch. And if we do try to bounce, look for a wall of sellers to show up right around that 25,550 to 25,600 area. Really important levels there.
So let's wrap it up with the key takeaways for today. 1. Expect a gap down start, no doubt about it. 2. The data from the big institutions and the options market is leaning bearish. 3. But don't forget the overall mood is still in greed, so some people might try to buy this dip. And 4. Keep an eye on the clock for that MSCI rebalancing. It could set off some real fireworks later on.
And so that leaves us with a big question for the day, doesn't it? You have this clear clash between the bearish data and the greedy sentiment. So which force is going to win today's battle? Will the hard data pull the market down like it's suggesting? Or will that greed kick in and lead to a big recovery from the lows? It's going to be a fascinating one to watch. Stay sharp, everyone. Good luck and trade safe.